This is your LMAX Exchange technical update for Thursday, November 24th, 2016. Euro dollar. So the euro continues to inch closer to that critical 2015 base at 104.63, and the market looks like it could be poised to retest that level at any moment. The downtrend remains firmly intact here, and a break below that level, a clear break below that level, could open the door for a move towards parity. At this point, look for any rallies to be very well capped ahead of 109. Sterling dollar. So cable remains confined to a broader downtrend, though we have seen a consolidation off the recent 31-year low. At this point, though, while the market holds below previous base at 128, the pressure remains on the downside, and there is risk for a retest of those lows down around 120. Dollar yen. So dollar yen continues with its amazing surge, the market piercing through 112 and trading up towards 113. Next key resistance comes in the form of that high that we saw back in March at 113.80, but at this point, with daily studies highly overextended, there is risk over the short term for some form of a pullback before the market heads higher. But any setbacks from here should be very well supported by previous resistance now turned support at 107.50. Euro Swiss. Euro Swiss is confined to a downtrend now, especially after breaking down below a range, the range base, which was at 108. The focus now is on a retest of the 2016 base at 106.24. At this point, look for any rallies to be well capped into 108. Aussie dollar. So Aussie has seen a shift in the structure favoring the downside after breaking below some key support at 74.21. This exposes the next drop down towards next key medium-term support at 71.45. Any rallies from here should be very well capped ahead of 76. Dollar CAD. Dollar CAD remains confined to a well-defined uptrend, and the market is now looking for that next higher low ahead of a fresh upside extension beyond the recent highs that we saw up around 135.90 and ultimately towards the next key target area in the 140 area. Look for any setbacks to ideally remain supported well above 130. Kiwi dollar. So the New Zealand dollar remains under intense pressure and is now focused on breaking down below next key medium-term support at 69.52. That's the low that we saw back on July 21st. A break below that level will expose a fresh downside extension towards the 65 area. At this point, look for any rallies to be very well capped ahead of 72. SPX 500. The S&P 500 has broken to a fresh record high this week, and this does open the door for the possibility of fresh upside extension towards 2250 and 2300. However, at the same time, if the market stalls out and reverses lower, we could be seeing a form of a double top off that August high and fresh downside. But at this point, a break back below 2100 would be required to take the immediate pressure off the top side. Gold. So the gold setbacks, the sharp setbacks that we've seen in gold continue, with the market now trading down towards the 1180 area. But if we pull back the chart going back a few years, you can see that there's solid internal support at the 1180 area. If we look back to places where the market stalled out and was supported going back to 2013 in June and then December. However, if the market establishes below 1180, this will put a lot of pressure back on the downside, suggesting a potential retest of those critical lows that we saw closer to 1,000, just under 1,100, going back to 2015. Look for the market to reverse course if we break back above a recent high at 1233, which would take the immediate pressure off the downside.